listening. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Let's take a look at the charts, shall we? Let's get right to it. How was your days today? I hope you all had a great day. I just got back from work. It was a nice day. I'm actually a teacher. I also make curriculum. I'm a curriculum specialist. I made a bunch of science curriculum stuff and tied everything together in a way which has yet to be seen. I'm looking to lease it out at some point. Yeah, so anyway, let's go back to where we started at. One time we had, we got accumulation on the 706 here, bounced up, extended above the mean, getting to another 706 region up here, started to revert back down, And that's basically 3 months of price action in a nutshell, in like one sentence. And we've reverted back from this impulse retrace idea to the mean. So we're at equal value. And it's kind of ironic because last time we had a FOMC meeting, which is going to be tomorrow. It was right in the same kind of retrace. Everyone was wondering if it's going to continue down lower or go higher. And we made a higher low just like before. And then we ended up surging up, and I was calling this as a solid bottom for more reasons than one. If we went to here, what were we seeing at that point? I think it was the 618 bounce here. Yeah, we retraced into a pocket here. And we also had kind of like bullish divergence on the 4 hour. And as we were saying earlier today, we did have bullish divergence on the 8 and 12 hour here on the money flow. We don't have it on the RSI per se, but just to give you an idea here, let's just zoom in. So you have the money flow in gray here. So you basically have from here to here, lower low on price action, higher low on money flow. Got the divergence crystal printed, locked and loaded. So there's money flow divergence on BTC on the 8 hour. Now you do the same exact thing on the 12 hour. You got it locked in here too. So you got from here to here, lower low on price action, higher low on money flow. That is bullish divergence on the 12 hour. So that right away is just kind of things that make you go things that make you go And you're about to get a cross over on the Williams out of the green from oversold, and the 12 hour has yet to give us a move. So if we look to the 22 as well, the treasured 22 of yours truly, we're in that region as well with the Williams. We're in a nice little pocket coming out of the green. You like to see this. You like to see this kind of like V kind of sneak up on you. Boom. So get that, where we get that rising sun. We had the rising sun on these other time frames that just didn't give it to us yet. It's like, what are they waiting for? You know, you got the rising sun on the 6 hour. Is it going to play out in similar fashion? Who knows? Let's take a look at the 12 hour. You haven't gotten it. Yeah. The 4 hour. The 4 hour slowly finagling its way up. You know, it did that around here too. It finagled out, and you had the rising sun. The rising sun just around the other time here too. And then you had this drop down to create that double bottom with a little bit of a liquidity grab before they come out. I still, you know, it seems a little bit too convenient that they're leaving this liquidity in the charts below the 706 here. So this like kind of stacked range that they're leaving here doesn't seem like it shall go untouched. So how will they do it? Will they just go down to go up? Or go up to go down to go up? Like, how are they going to clear this zone exactly? They started to cake it up real nice in this region. It's pretty even now. And as we go forward in time, we forget the previous minutes that were here. And so the imbalance is slowly decreasing to negative 3 billion to shorts. But obviously they haven't closed the trades at all. It's just forgetting the minutes before and the liquidity pools before, which is why you go to the heat maps after that. So you still have this region up here at 23K, but then now you're starting to get this region down here at 20, 21.9, 21.7. The entire way has just got liquidity now, which wasn't there before. It was very sparse, and this was thick. So they thickened it up down below. Did they do that to spike up to go down? I mean, it's ambiguous at the moment, to say the least. But just going off of the time frames confluence from before, you know, having the Williams cross and the 6 and the 12 and the 22 in your favor, kind of interesting. Looking at the hourly is oversold again. And I wanted to see what that 15. Okay, 15 minutes still has room to go. From the hourly, I want to inspect the higher time frame and lower time frame stochastic. So we're going to go back to the hourly and turn on the higher and lower time frame stochastic on B. So here we're in the hourly time frame for Bitcoin, and we're seeing the lower time frame, which is the 30-minute, in conjunction with the hourly wanting to push up here on the 4-hour, which is trying to come down on you, as we've been seeing for the past couple days. And the 4-hour has been nicely juggled off the momentum waves of these other time frames to come down in such a slight manner. So are you going to see this 30-minute work together with the hourly to curve this in an upward manner to move up? Are you going to see that tandem play for that 4-hour to start to curve? So if we go to the 4-hour with this on, let's just see what it looks like. So the 4-hour has been coming down in a nice manner. You're about to get to the 50 zone. That would also be a place where it could possibly curve. You kind of see things in times past. It comes down to that region before curving back up. If it does curve back up, it would do that around that region. And that's when you had daily time frame support in your favor to push it up. This is the higher time frame. So we have the daily time frame kind of curving up too. So you have that in conjunction with to kind of possibly catch and curve this 4-hour from going all the way down. Since you also have the 6 and the 12 and the 22 in your favor as well, those are some higher time frame things that are keeping this at bay from being as massive as it could be. All right, hope that makes sense for you stochastic traders out there. Let's go to the 30-minute. And go into here. So the 30-minute currently is going up, as we said, and then the hourly is kind of curving to go join it to push the 15-minute alongside. And it looks like it's poised to work together to go up at this time. How far up is the question? Let's turn on Momentum Master A and get out of this really quick. So you have the cloud starting to thin. You got the weighted moving average, 200 weighted moving average above you. So you have to burst through this. And once again, you burst through, retrace out, you come back and kiss it. I mean, just yesterday, for example, like where were we yesterday? Like yesterday we were talking about breaking out, come back and kiss it, and then we didn't kiss on the cloud. But either way, you take the impulse to the top of this fib level or wherever it's going to take you, whether it's going to be here, and you reassess, because we're currently range trading. So we've done that every single time. So at the bare minimum, you should be moving things into profit if you are taking these crossover events up. You take them up as far as it'll take you and let it knock you out. Not financial advice, of course, but you know, there's plenty of other entries that could be given, and you could get these all throughout. So it's kind of fascinating that they're not coming down to this region at all after that point. Just fascinating, really. So we're going to look at the heat maps. We broke the structure and then we came back immediately into it, but still that was a break of structure, and we've been holding the 618 level pretty strongly, appearing to be strong. Everything is appearances, mind you. So it appears to be strong right now. And yeah, you keep getting those higher time frame diamond supports here. So just to give you a quick key on how this works really quick, we're going to go to just show you how these time frames operate. So you have a Momentum Master Ultimate, you have different symbols, if you will, these circles, diamonds, X's, and nukes and rockets. Now the circles are basically lower time frames, the 5, the 15, the 1 hour. The diamonds are the 4 hour, 6 and 12, and then you got and 22. And then if you got more higher time frames, oversold or overbought, then you get these X's. So you get different things going on here that represent these things. So when you get the X with the diamond, it's showing there's mostly higher time frame support here. And if you get the circles alongside it, like here, you're getting 3 time frames overbought. It just disappeared from the circle. So that would tell me right away, just because the circle was present a moment ago, that the 5 minute and the 15 are getting high, which you can also see here, of course. But it's not just the stochastic RSI, it's 32 pieces of data that come into your phone as these alerts. So you could, if you're waiting for a previous level, you only need to set one alert, and it perpetually does this and monitors all these levels for you and gives this out. Like 5 minutes ago, you would have gotten that overbought idea to your phone. And it doesn't mean immediately get out, but if you're getting it, it could tell you to move or take profit or do something to make a decision. So we've just been range trading in this entire range and trying to determine whether the they might even hold it all the way to the FOMC, because we're already in Tuesday. But once again, we've had that crossover. We had the crossover events on the 4 hour. We had the crossover events on the 6 hour, I think. Yeah, and then we had on the baselines I'm talking about now, and we had the crossover event on the 8 hour, and we had these bullish divergences on the 8 and the 12. Are we getting the crossover on the 12 hour now? Let's see. Yes, we are. So we got the crossover on the 12 hour now too. This is just telling you, similar to here, like, you know, just look, you could go back and just see what happened when we crossed over before. Now we did that here, and then it immediately followed by a cross down, so that could happen. It's not 100%, of course, but you have things like that, and you could meander around before going up. And you could go down and liquidity grab before you go back up. But it's just noteworthy. It's a noteworthy event, to say the least. And yeah, that's Bitcoin. I think you know, we've looked at the levels of liquidity on heat map, but we'll just do it for you every single day to try to give you points where it might have changed. Getting an oversold value on 3 time frames now. It's like flirting between them both. Let's see what's saying. Extensive knowledge in essence. Hey, what's up, Wendy? How you doing? So let's go to the... It's getting warmer these days. I can feel the sun come out. Today's a full moon here in Japan. It's the worm moon, because I guess the worms are moving in the soil with the heat coming in from the springtime. So this is the 7 day. So it's enticed 5 billion at 22.7, 4 billion at 22.75, near 2 billion at 22.8. So just in the immediate 7-day, you have more up in this region. So if it was intending to go to the higher pools to go down, like, you'd be likely to knock out this region here at 22.7. Yeah, the 22.7, 22.8 range. Let's go see what's in that point. The 22.7, 22.8 would put you about there. So what is that? Is that just like just outside the range equilibrium of this? Yeah, let's see. Come on, what? I'm clicking it and it's not. Hello, right click is not working or what? There we go. Wait, what? Why won't it let me? It's like having a trouble loading my profiles or something. So weird. It's like not letting me see my saved profiles here. There we go. Yeah, so that would be like the 0.5, the equilibrium of this entire impulse down. So getting to the 0.5 of this, we'll just leave all the levels up here for now. And yeah, you got 23 is the other region we were talking about with the bubbles that were stacked up there. So this is what the bubbles represent. So these bubbles are where the trades opened and people short at these different points, and you can zoom in, you know, and see, okay, $176 million shorted right here at this point, and you could see whether they're underwater or not. And so that's what this heat map is consolidating in this region. So you have $5 billion at 23,150, and these are immediately hotter. You can see the heat signature value is in 5 billion to be yellow. So you have these 5 billion regions up here as opposed to down here, which is slightly lower. You're at 4.5 billion. 5 billion is down here though. So just off this 7-day is more caked to this side, although, and also up here by the looks of it at 24. So let's go to the 1 month. Let's see how it's changed. Hey Wendy, I forgot to send you that quartz. I'll get it to you as soon as you be well. Speaking of quartz, oh man, I wish I had it. I left it in my bag. I had this pickup mic that has a quartz actualizer. Quartz is, the funny thing about quartz is that it basically powers everything. Like you heard of Silicon Valley and silicon, right? Like quartz is SiO2, silicon dioxide, right? So what they do is they basically take all the quartz and they melt it down. Quartz is the most abundant crystal on Earth, by the way. So they melt down all the quartz and then they get it into this monocrystalline silicon, and they steam off even more impurities with it, mixing it with this chemical, and get it into the purest form of quartz possible. And they grow it into these large columned ingots of pure silicon, and then you get these like silicon wafers that they cut off of it, and you make solar panels, you can make chips, like basically everything uses silicon to, we live in a world of crystals basically. You know, crystal healing seems woo-woo, but it's literally what we do with everything we're looking at with our devices is all silicon. And so, you know, fun fact about silicon too is like in quartz is like North Carolina has the best quartz in the world. So if, you know, if something happens, God forbid, to Taiwan, they get most of their quartz from America anyway. So the world depends on America for their quartz to get the purest quartz, and to refine it properly, you'd need America's help. So yeah, good luck with that if they want to get all the silicon. 65% of the chips come from Taiwan, by the way, but it's all American technology anyway. Quartz, 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 silicon dioxide. And they have it has the piezoelectric effect. Actually, I have 2 quartz here, but they're just like raw ones. But sorry, I'm a nerd. But you have these quartz, and if you bang them together, they'll make sparks because it's the piezoelectric effect. So it can generate electricity. That's how you use it in solar panels and stuff. It makes the electrons flow and generate. Quartz is cool. Crystals are cool. So we're beneath the cloud on the hourly. Sorry, I'm getting distracted. So the 1 month. So the 1 month is getting the 1 month has 16 billion down here at 21.5, 14 billion at 21.6. You clearly imbalanced to grab this stuff on the 1 month time frame, and we did that before here. So the immediate upside region up here is kind of sparse in comparison. You got 7 billion, 5 billion, 3 billion. You know, I originally, just to preface what I had been saying when I was calling it to go up to here, is I was thinking if it goes up, it goes down to go up. Like, if that makes sense, like it would go up, fake everyone out that were going long, and then go get the longs one last time, fake everyone out that were going bearish, and then go up to get these guys. Would be the course of action that would be the least foreseen, let's say. It's like, oh, we're bullish, wait, we're bearish, wait, no, we're super bullish, and then they wouldn't see the move coming. It's just like, you know, but I don't want to speculate too far into the future. But yes, you have a large pool down here, just to say. And then once again, these values vary, so it's at 16 billion for all this yellow, so the yellow just screams at you, right? But it's 16 billion in these regions. Now if you go to a 3 month time frame, it's going to say the same thing, if I recall, and it's going to be in the 40s, 40 billion. Yeah, so you got 45 billion to equal yellow, and it's clearly imbalanced down here. But our big old curveball is that yearly time frame of a bunch of stuff up here that's holding us there. So how much of this do they want before they go up? That's always been my question. How much of this do they need before that justifies them to go up to here again? So it's been caked up nicely. You know, this previous 19.6 region had little under 2 billion back here, and now it's all the way up to like 23. So you get like large caked up liquidity down here. Like, what is actually going to occur down here? I mean, yeah, it's ambiguous. They try to make it as ambiguous as possible at all times. And then this is our grand old yearly time frame where we have the 178 billion, 100 billion, 72, 130, and it's just this large amount right above us that they haven't cleared just yet. So by comparison, you know, you look at that 40, 50, 70, 80, 90, all those levels we just looked at that were yellow are no longer yellow. It's more yellow up here. So it's like, wait, which one are they going for again? So it's a really interesting thing to juxtapose all of these pools and to try to gauge which one is at the immediate place to be taken. So at the current price and time, you know, you go up and grab something like this to go down was kind of my thought process, was to go recover some of the vector to the left, get everyone to think that we're like bullish, and then go down to grab some of this stuff, and then get everyone to think we're bearish, and then go up and get those guys finally. Yeah, I mean, let's leave the 3 month open and just put in a bearish projection on the charts and see where else we could go. So the one thing about bearish projection things that we talked about in length yesterday. I think we did a good job talking about it. We can always draw the retracement again. So we'll just do this, remove it again, and just do it fresh to show you how to do these trend-based fib extension tools yet again. So you find trend-based fib extension tool, it's next to your fib retracement, you favorite it, and then you click 3 times. So where do you click? So you find a place where it dropped or went up. We're doing a bearish one, so we're going to look at the retracement or the impulse to the downside, so see how bad it dropped, and then from that drop down it retraced back up, and then where did it start to retrace back up to? And you just go to the highest point before it dropped, and then it gives you this level, this idea or whatever of where it could go down further. Okay, so you be precise with this. I'm going to put it right there on the wick to wick, just making sure it's accurate, precise, precision. Interesting thing about words, the decision is to cut off the possibility. So you have D, which is off, and sizz, like scissors, cut in. You cut off the possibility is to make a decision. So the precision is being able to determine where to cut off before you cut off, if that makes any sense. So it's interesting how the Latin makes everything up. So you had these bearish ideas, and then it takes you down to the 21.4 region if we end up going all the way to the 2. We went to the 168, and this doesn't look like a region you would bounce at, right? It's just like what's over here, not much. I mean, there's these candles, that vector candles that they recovered, but in general, you know, bouncing off the 1618 here was kind of an interesting point that I've noticed again and again with these trend-based fib extension tools, is they end up projecting a reality that occurs. So does that mean we come down to this 2 at 21.448 at some point? This is why I marked it off here. So 21.448 would have us at 21.448 would have like 18 billion or so. It still doesn't get into that juicy meat at 48 billion. It gets you like 21.8, 21.448. It's only like 21 billion. So it, you know, doesn't put you into the meat of the matter at 2800. So is there like another level that I'm missing here? Like the bearish trend, the trend-based fibs, do I need to do it from another impulse now? Like we've proven that place is cool, right? So we can go back to that later. So what we're gonna do is try to find another trend-based fib extension tool. So we start from here, and we're gonna look into a larger thing. So we went from the ultimate top, dropped down to here, retrace, continuation idea. And so far we're at the 786 region of that. So if we went into a larger zone of liquidity down here, now you're getting into kind of like a deeper bearish retracement idea, which would put you down in this region. 1,500. I like that region actually. Yeah, that's quite nice. 20,800 would take out all that stuff. So yeah, that would be a good point to like bounce, because there's still, I mean, it's still good here, but going down to that region would be not necessarily a bad thing to knock out all of these guys that entered. I mean, it makes sense too. Like, think about it for a second, right? So all of these traders who opened, right? Like all of these guys from January back here, January 14th, basically from this pull up here, from January, let's be conservative, January 20th. From January 20th, there's been people holding longs, let's just say. And they've been creating this huge amount of liquidity down here at 20,800, $48 billion worth. So they've been open for like 2 months, just creating this billions and billions of dollars down here. So what, like, you know, why would they just keep paying them? Like, just why? Why would you do that? I mean, It's an insidious game where they fake people out and grab them and then they go up. So it doesn't mean just because it goes down, it's going down forever. Like everyone wants to project into like 7K or 100K. It doesn't make any sense to me. It doesn't matter. All you want to catch is like that, and then you want to catch that. Like it doesn't matter. Like don't hold on to it. Don't marry the trade. Just like try to catch the momentum when it's doing that or doing that. That's basically what you're trying to catch, right? You know? Don't marry any trade. Like there's Bitcoin maxis that just want to see Bitcoin go up all the time, but it'll do what it's going to do when it's going to do it. Period, you know? And just like it could go down to just go up. That's what we've seen. Like the liquidity grab is par for the course on taking a trade to the upside if it goes down and grabs this stuff. So yeah, that's been an idea that I've been thinking about. Like it goes up to go down to go up. It goes up to go down to go up. How far down is the question. This looks like it could stand to be caked up some more and give some solace, but yeah. That's the liquidity and I'm sticking to it. So we've moved from that initial bearish thing that we know the 2 would take us down to here anyway, and it gives us more fidelity on this range. So it gives us a little bit more, you know, to work with within this region, because we loosened up our, you know, our impulse retrace regions. We've admitted that this could be a bearish projection of a continuation idea down. So that if that's the case, that would be down to these regions. And it puts these things on the table. Boom, boom, boom. So you got the cloud resistance. Like even if you were to come up to that region we were talking about here, it should also be the ATR at this point. Like, and the adaptive and the cloud. Like this whole region is just resistance, screaming resistance anyway. You know, without any Fibonacci's here, like that's just saying like resistance, viva la resistance, and then it just would knock you back down at that point. So all things considered, you got the 6, the 12, the 22. We've already reiterated that. You got the crossovers here in your favor for upside. You got overall liquidity down below in the 40 billions down here waiting to be grabbed at some point, but you also have hundreds of billions up here that have been open since like June of last year. So yeah, rocking a hard place much. Let's go take a look at the S&P and the dollar and see what they're screaming about. So we talked about it coming down and seeing where it would go from this. Once again, it's a similar kind of bearish projection we put out from here to see where it would go down to, and it bounced off the 786 here from basically, yeah, yesterday. We were talking about wondering what it was going to do in this region, and if it were to continue and break beyond this support structure, it would have gone down possibly to here. But now we're still in contention because we've held obviously this 236 region of the bullish trend-based fib tool that you could come back up realistically to 786. So you got the 4 hour on your side. Let's see, the 6 hour is just starting to express itself. You're getting this weird kind of like similarity conjunction where they're in tandem with one another. It looks like where they both might pump. Like they got the 6 and the 12, and you got this. You got the adaptive on your side. You're bouncing off the adaptive here, so you could see this go up from here by the looks of it. The hourly is overbought right now. on the dollar. The hourly's overbought, but you got these higher time frame, or all these time frames oversold, and this is what the hourly gave you, which was essentially nearly 0.5%. You reached up beyond the fair value gap here to possibly continue up higher. So the 15-minute has reset as well. 15-minute looks to go from here. It SR flipped the adaptive and the weighted moving average, so this could probably surge up from this point, because they basically first met with resistance, broke down, came back above it. It's SR flipping it right now. So this is your little, cup and handle kind of flag out moment for the 15-minute to go out here. You did get the baselines above the price on the 15-minute here, which is starting to see some volume here to negate that and kind of create this ascending channel up with the Keltner. So you could break up above into the bullish trend-based fib levels again, which, if that is going up, dollar's generally inverse to Bitcoin, so Bitcoin going down from that point. Let's go to the S&P. So, whoa, that's weird. That's weird. We put this out on the live and said we would go up to here and reject. And that filled that out like, yeah. Hey Beavis, that like filled out your projection like perfectly. And now you're bouncing off of the adaptive weighted here. It's like they're exactly the same. Like, what the heck? It's almost like, okay, it's on a different time frame, but the 15-minute dollar, okay, so the dollar, the 15-minute dollar looks bullish, but you could be making it shoulder, head and shoulder, kind of M formation down if the 15-minute fades and then the hourly dumps on you. Because if you go to the hourly on the S&P, that's so weird. It's so funny when it does that. So you got the hourly you got the 15 and the hourly in your favor, but then not the 4-hour. So the hourly play wants to play you up, to this region that I didn't change at all since yesterday. And you're kind of getting that resistance that we talked about on the cloud. You got the cloud, you come back, you kiss it, and then you see that possibility to go up further. And we haven't quite recovered this gap region just yet here at 4,091. So we could go to the gap and recover the gap. On the hourly 15-minute time frame, if we go to the hourly once again, let's look for some divergence. But you have the Williams not on your side on this one. Williams is saying, cool out, fellas. But if they decide, no, we gotta hold the line, and they kick it into overdrive, it could come up too. Could succumb to the dollar. Let's just go to the 15. Minute is oversold. Williams in a good position. You see, this is one thing where stochastic fails you. See, look, you had the 15-minute oversold, 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 and now it's starting to come up. Well, you had the Williams not in your favor, so it came down on you, and until it was in your favor together, then you don't start to see that expression up together. So that's why we have these things working with one another in conjunction, because it will give you those moments to give pause, let's say, for the Williams. And so with the hourly here, this is what gives me pause, is this alarm. So even though the hourly is getting low, it could come down out of this even further. So this did happen yesterday, but we're not going to get married to it. you know, it could go down into this region and kiss that cloud. So it could come down here and then go higher back up, depending on the dollar, if this comes down to reset. And then you have the 4 hour also wanting to reset, but it likely has the same what's it called, higher time frame support of the 6 and the 12 hour, just like Bitcoin. So let's take a look at that. So you got the 6 hour cloud. 6 hours overbought now, and the 12 hours just getting started, and you're above the adaptive. So there's an ability to SR flip this at this one region, where if it holds above this one region, it would have to try its damnedest to stay above this region if it remains bullish. If it goes below this level, then it's likely to go down into the regions of this cloud area. So this fib level, this one fib level, would determine whether it goes down to the 1382 or not. So then you have more resistance to break through to break this bearish impulse, which is why you have all these lines here to worry about. Because if you can't break above this, then it's likely to come down to here. And in terms of like a healthy retrace anyway, like you don't buy at a premium, so you would be looking for you would be looking for something like down here anyway, like a 618 bounce. Realistically speaking, on the 4 hour coming down, with the 6 hour also overbought, and if the dollar is looking to play ball by going up, on the 15 minute anyway. 15 minute, but you got the hourly. Yeah. Interesting. And so we're starting to come back down right here. So we're going to break this region and come into this pool. And the immediate time, not sure. Once again, this makes it a little like the time they've been taking and caking up both sides is making it more ambiguous to me. Is easier to see that imbalance here because there was less down here and more up here. Now it's starting to get even Steven. It's harder to say. Let's take a look at Sol from yesterday and Matic, and then I'll ask you guys what you're in dip or something on one of these. Where was it? Was it on? So we had like a rocket ship in the morning. Was it? Sunday. So we were Sunday night over here. Didn't really come up just yet, but I believe we were at the 886 level. But either way, like these rockets tend to have some sort of interest accrue around them. So is it going to see some upside? It has essentially gone nowhere. Never got to the 236. Like we were talking about, it needs to get above the 236 to kind of appear to even approach this region whatsoever. So, but if you go back and back test these rockets on other time frames, I'm going to turn off the crossovers on this really quick because it's just a little bit too much for me at this moment. Show baseline crosses. All right, turn them off. Yeah, so we had a rocket ship down here, and of course that played out on Sol. And so, yeah, they tend to do their thing, and the nukes tend to do their thing as well. So, still hasn't played out just yet. The 15 minute is high. Interesting. We'll see how that plays out then. Let's just keep it on the back burner. Matic. Matic went up from there. Got the resistance on the 706, and then that 706 was from the bullish projection that we put out. So we were just showing you how you would scalp. Like even on this this impulse retrace idea tells you where you'd potentially fatigue out if you can hold the 236, and you held the 236, and then that could have just been like a little mini scalp up, you know, a 3% gains kind of thing. And you got that alert to come up on your phone. Cool beans. Matic. So what you guys into? Let's check it out. Let's see. Danny, compare the price action on the daily from the last 2 months to Bitcoin all-time high when I had a double top. The structures look identical. Danny, compare the price action on the daily from the last 2 months to the Bitcoin all-time high when I had a double top. The structures look identical. The last 2 months price action looked like the mini double top we had at the all-time high. The last 2 months of structure. So if we go to the daily time frame, January, February, and March. So the last 2 months, yeah, would be this. Look identical to the all-time high. Yeah, I remember looking at this back in the day, and then they, of course, you know, you have the double top and then you go down. This was a little bit more abrupt, and they didn't play around as long, I felt. So this is like, what, October, November. This was in the span of like a month, right? It was very, as things go forward in time, they're the methodologies in which they use to employ the traps, let's say, kind of get complexify as well. So this is less, what's the word I'm looking for? It's less intricate. You know, it's a less intricate thing, but it's basically your extended M pattern. You know, you have the M, and then it went down from that point, right? But it's less days, obviously, that's going on. But let's just go to a lower time frame, see if like the actual candles mirror that as a fractal on a different time. Yeah, it's slightly different because but you did have that kind of lower high kind of go up. Just everything's kind of like compressed. Like this was like days. This was like a weekend down where we just were, you know, and before we went up, and then it kind of came down, and then it came down more abruptly because it's a lower time frame, right? Whereas we've been kind of like meandering and taking our time and retracing up and going back down. So I wouldn't say it's a direct fractal, but I do see what you're saying with the extended M idea. Let me go back and just juxtapose one more time. Like that brief thing that was on the 4 hour, it's like more complex here because it's like, you know, 5 days. 5 days, yeah, it took like 5 days to do that whole thing. So it's like that thing back there was like two days at tops or something. So it's basically like everything's a little bit more expanded is the word. But I see what you mean. Like it went up here and then it came down. But that abruptness of the coming down is more like, we're not as abrupt, not as abrupt. It's like kind of like in slow motion, you know? Whereas before it was just like drop, come back up, drop, you know? Here is kind of abrupt. That abruptness being over here would be the exact same thing. And it was like a very sharp drop, if I recall, and then it built up and then it dropped again. But yeah, no, I see the similarity completely. So do we drop down further? I believe we went up at that point. Like I have a picture of that moment where we kind of went up before we dropped. Let me see. Yeah. No, that's 46. We didn't really do the consolidation, but yeah, we did this consolidation like everyone was thinking we were gonna drop, and then we went up and then we dropped down further, like. So if it does this consolidation, then it's likely to do like kind of like an inverse Bart Simpson before it goes down, because making it too easy to like just consolidate down further. I mean, that's cool though. Thanks for sharing. Thanks for sharing. Sharing is caring. It's our third hit on this upsloping trend the BTC has ridden over the last couple months. So, yeah, it's kind of getting, like, I wouldn't be surprised if they, like, just go range all the way to Wednesday and then do some shenanigans on the FOMC thing, similar to, like, what they did over here before they make the move, to just dupe out the maximum on both sides before the move occurs, to give justification for that. You're getting the cloud to come to you, which is kind of like odd. It makes it more indecisive when it gets there because there's no intention behind it. So we're not seeing any end in sight to the purpleness of the cloud or thinning of the cloud on those time frames. So I can't really say where we go. Like, it doesn't really make sense to me. But if we go purely off of the crossovers and the bullish divergence on the 8 and the 12 hour, then it's saying, you know, that there's going to be some sort of thing that takes it up to a region. And if I were to say, it would be like, you know, the local pool area of still 23K looks about to be as juicy as it gets in this local region before, you know, it could come down reasonably to here and snag all of that and more. So, I mean, it just, every time I look at it, I see the same thing. I see it going up and then going down, and then going up to grab this stuff at some point. So, you know, if I had to say, I would say it would go up to 23K and then come back to this stuff. But at that point, you know, do you have anything you guys want me to look at? Dropping. Dollars rising, and the S&P would be likely dropping down. Anyone have anything they want to look at, like a coin of some sort, asset, Tesla, anything like that. Alright guys, well I've been on long enough, so I think that's it for me right now. Like, you know, you want to watch whether or not we basically leading up to the FOMCs, kind of like, I don't really feel the same fervor about this as I did back here when I believed that it was going up, and it did. Like, it could, you know, I just think that if it were to bounce, like, I'd look for seeing the strength of it holding at 23 or not. But you do have this pool down here that's still right for the taking, just a hop, skip, and a jump away. So that is on the table. But the bullish divergence on the 6 and the 8 could take you up at some point soon. So you could be looking for a kind of region that it's going into at this exact moment in time of this local Fibonacci level, which it's been holding. We'll look at the liquidation levels and then give it a whirl. So we're getting rejected on the cloud here on the 15-minute. We couldn't muster up the strength to go above it. Yeah, it looks like you got more 100x down here. So they're going down to the knock out the 100x potentially, which would also coincide with this level, which they haven't gone to in a while. And once again, when they swat off the 100x, then they get those guys out. They don't have to pay them 100 times their money. It lessens a burden for them to then come take the 100x out on the other side. And that's basically what range trading is just swatting off all these 100x guys, saying like gnats, like, keep them off me. And then if they develop a bigger pool, then they go get to the 50x. Alright, ladies and gentlemen, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in today. We're going to just see if it goes down to one of these levels. And yeah, in the next minute or two, and then we'll just let it go from that point. So you can clearly see on the 1 minute, there's still a lot of shorts that open 100x here too, but they still got more down in here. So it broke beneath the 618 here. Alright guys, I could stare at this all day, so I'm gonna just let you go. Alright guys, thank you very much. Peace. I'll catch you on the flip side.